Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all this previous move to the upside has been created. Again, here the market tested and rejected the level to the upside. And we can see how also in multiple occasions recently the market tested and rejected this level to the upside, therefore continuing to respect this zone as support and demand. And at the moment, the market is testing and rejecting once again the exact same level and is currently still in the process of rejecting this zone to the upside. So the monthly time frame does seem quite bullish, and in a situation like this, more bullish price action could be expected once again away from this area if the market will successfully manage to test this zone again. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, what we can notice is that in creating this move to the downside, the market is also currently printing this weekly M pattern. Now, in general, after the creation of an M pattern, what you would generally expect is for the market to create a rejection to the upside to go and complete the M pattern itself at the neckline, which would be the previous support turn resistance from a weekly standpoint. So here in the weekly time frame, if the market will manage to create a rejection to the upside, there is a good probability of seeing a potential completion of this M pattern at the neckline. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is even more clear because we can notice how, first of all, the market started with a massive impulse to the downside in which clearly sellers were in control. We had big red candles with a lot of volume, and in this move to the downside, we don't see any kind of rejections to the upside. So it means that no aggressive buyers were entering again into this market, and clearly, as I just said, sellers were in control. However, afterwards, the market started exhibiting this kind of behavior in which we had every time the market was creating a push to the downside, immediately a rejection to the upside. So it seems like this market is entering into an exhaustion of the downtrend because buyers are entering at every dip below. And this is usually an exhaustion pattern when you see this kind of triangle formation, after which a rejection to the upside usually follows. It's obviously not every time, but when there is such pattern, after a strong impulse to the downside, it usually means that the market is overextended to the downside and in need of a potential rejection to the upside. Now, let's keep all of this in mind and go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing precisely on the NZD. Now, the first thing that we have to keep in mind is that if we're looking at the data for the NZD, we're actually already looking at NZDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we have seen a massive amount of increase of the net positioning. We went from having a very negative net positioning with minus 16.7k net positions all the way up to now having minus 292 net positions. So we had a clear increase of the longs from an institutional perspective, which went from 17k all the way up to 25k, and shorts from an institutional perspective got decreased from 38.7k all the way down to 25.3k. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. So in a situation like this, where we have a market which is showing in exhaustion after a strong push to the downside, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to complete the weekly M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.